very good morning and thank you for staying tuned to Sunrise at Sea here on CTV. Welcome to our Wellness, Beauty and Lifestyle segment. My name is Agi Uwase and today we are talking financial wellness. Well, joining me at the center of this conversation is Mr. Dennis Chibuka Musoke, who is the Executive Director of Entrepreneurs Financial Center. Good morning, sir. Thanks for joining us.
Good morning, Agi. Thank you very much for having me.
Yes.
Yep.
Now, before we go into the discussion that we have today, would like you to give us a little insight on EFC and what it does.
Okay. Thank you very much, Agi. EFC, like you've mentioned, is the Entrepreneurship Financial Center. And at EFC, we deal with business people. We have been present in this country since 2011. So last year, we celebrated our 10 years of presence in this country. We are the bank for the entrepreneurs. We are a regulated financial institution, and our full name is EFC Uganda Limited, MDI, which means Microfinance Deposit Taking Institution. Okay. Our ownership, our key shareholders is Africa Invest, Bio from Belgium, DID from Canada, and Guts by Trust, which is an organization that is overseen by the Faculty of Technology at Makerere University.
Okay.
Yes.
First of all, congratulations on that milestone.
Thank you very much.
On the 10-year milestone.
Yes.
Okay, we'll get into the conversation, and today we are talking about loan handling.
Yes.
Well, would like to get, because from the layman's perspective, like myself, I would know that a loan is money that you borrow from a bank. It could be from a money lender, it could be from anyone, but
Yes.
would like to get the perspective from a banker as yourself, okay, that has been in this business for quite some time.
Yes.
What is loan handling?
Okay, thank you very much. From the perspective of a regulated financial institution, we have customers who keep their money with us.
Yes.
And we have customers who need money. So what the bank does is, or the financial institution does, is that we are an intermediary for those who have cash in excess and those who need cash. In our perspective, that is what a loan is. That a loan is an instrument that you will get from, I will stick to financial institution, from a financial institution, so that you can be able to meet your needs, which needs could be business expansion, which needs could be personal needs, which needs could be acquiring of an asset, or
yes,
even construction.
Okay.
Yes.
Now, so many people do not know why they should get a loan. I mean, people get loans for different reasons. Others, it could be trivial, and it could be something very important. Would like to tell the viewer out there, when should somebody get a loan? Yes.
Thank you very much. I think for me, even before I answer the question, when should someone get a loan, it is important that you have the right financial partner. And I'll speak about EFC. That at EFC we have we have people who have been trained, or we have been trained to get into your business, understand your business, understand the needs of the business, understand where you're coming from, where you are at now, and where you're going, so that if you have a need for finance, we can be able to take a deep dive into that need and advise you appropriately. It is true that there are lots of instances where people take out money that they actually do not need.
Yes.
Yes, ma'am.
And also on that, to add on to that same particular question, like you said, some people get loans when they do not need them. So that's where the why comes in.
Yes.
So from a banker's perspective still, we want to know, it's more of advice that you can give somebody out there.
Yes.
If the need at hand, if the need at hand is trivial, do they actually need to go to a bank to get a loan? Can they get it from a friend? Can they, because getting loans comes with security. You have to have the security it's needed by a bank.
Yes.
So how does somebody go about getting a loan?
Okay, you use the word trivial. I think trivial is relative. What may be trivial for one person may
not be on the other.
Very, very important from another person. But again, from the regulated financial or banker's perspective, somebody can might need to get a loan for capital, for getting capital into their business. You might have started a business, and you need cash to run the business. Somebody might need a loan for working capital, and basically working capital is the cash that you need to be able to support business operations. Somebody might need capital for expansion.
Yes.
You might have, let's say, salon, and you want to open other branches of, more branches. Somebody might need a loan for business diversification.
Yes.
You might have a business that is doing well, but then you look at it and you feel that you can be able to expand into doing more.
Yes.
And somebody also could need a loan for buying an asset, let's say a car or a machine that is going to support their business. And then also somebody can take out a loan for personal needs. In my view, personal needs, needs like medical, needs like school fees, and needs like education.
Which are very important, that you cannot do without.
Yes, yes.
Okay, now let's talk about the part where the repayment plan comes in, because after getting a loan, then you have to have that repayment plan.
Yes.
About the repayment plan, how does somebody go about it? Because it could happen in an event that they cannot actually get back the money, and they still want to retain the asset that they used as security.
Yes. I think for me, a sound financial institution is that institution that will understand your need. Not only your need, but also your business, and also the cash flows of your business. And will only advance the loan to you when they have ascertained that there is a cash flow that will be able to meet that loan. Like I said in the beginning, the bank is an intermediary that will have that will lend out money from customers who have money in excess. So the money that the bank lends out is not the bank's money. So it is any financial institution, a good financial institution, will ensure that there is a cash flow that will be able to pay off the loan facility that you've taken.
Okay, and finally, I would like to know from you, from a banker's perspective, still again, are there those avenues that you wouldn't advise someone to get a loan from? Of course, we've had so many of them out there in the media, and even personally, I was told before that, a friend of mine got a loan from a money lender, and it looks like their aim was to actually take their security, what they gave in as security. You get to a point where it's time for you to pay that loan back, and you're trying to call this person, and their phones are off totally. So should people avoid other avenues and stick to avenues, some particular avenues, when it comes to getting a loan?
Thank you very much for that question. My advice would be that when you're considering to take out a loan, you take it out from a regulated financial institution. And the regulated financial institution gives you protection because, one, we are regulated and supervised by Bank of Uganda, for instance. And we are also governed by laws. For a bank, they are governed by the FIA. For an institution like ours, we are governed by the MDI Act. Okay. And also there is much more protection because we are also guided by the consumer protection guidelines of the central bank. So my advice would be that when you choose to take out a loan, take it out, number one, from a financial institution that is regulated, and then number two, from a financial institution that will listen to you and will understand your need and agree with you on the terms, including the repayment, in line with your affordability and cash flows.
Well, Mr. Chibuka, we've already, in this conversation, would like you to give us a deep dive, actually, into financial loan handling, or the whole process. How can somebody be able to handle a loan?
Okay. Thank you very much, Agi, for that question. I think for me, the first one is it is important for somebody to determine whether by the time they go to a a lender, whether it is a formal lender or an informal lender, whether they have a need or a want. But, it is important that they determine and they are sure that what they have is actually a need. And then the second one is, the second consideration for me is it is important for the borrower to be 100% sure that they have the ability to pay, that they will be able to handle their obligation. Sometimes our needs will give us courage, a lot of courage, and then you say, I need 1 billion shillings. But it is important for you to look into your finances, take a deep dive into your affairs, and ensure that you have the ability to pay. And then thirdly, they should have the intention of paying. It is important that that they have the intention to pay. And it is also known that sometimes things go wrong. Okay, we have just come out of, we are still in the pandemic actually. We have just come out of a series of lockdowns.
Yes.
What is important is for the borrower to speak to the bank, to speak to the lender before the lender speaks to them, and discuss their situation. Because we as lenders, especially the formal lenders, that we have a cocktail. We have a number of solutions that can be, that can be used to address times of difficulty for a customer. Yes. We can, for instance, restructure the loan. We can defer payments. Yes, so there are a number of things. It is very, very important that the person speaks up and before the finance or the lender reaches out to them. Yes.
Oh, yes. And would you kindly give us your final remarks on this loan management, getting a loan, managing it, and how to service your loan and the whole repayment plan? Your final remarks.
Thank you very much. I believe that loans are good, and
should be taken.
Should be
when there's need.
Because even the biggest corporates in this country, the biggest corporates in the world will borrow so that they can finance their expansion and other needs.
Yes.
But the most important thing for me is to be able to choose your lender carefully and ensure that your goals are actually in line with the goals of the lender. And you will not go to a lender whereby they're interested in taking your property. Every time you go to a finance,
the thing is, you never know.
They're discussing security or collateral before ability to pay. I think that is when you come to EFC.
Okay, well, you heard it from Mr. Dennis Chibukamsoke, who is the Executive Director of EFC. And that is what we had for you on the segment of Wellness, Beauty and Lifestyle. Do not go anywhere. Sunrise at Sea continues.